Understanding market environments is the key to making smarter trading decisions. Today, we'll break down the four major economic environments: reflation, stagflation, Goldilocks, and recession, and show you exactly which assets and currencies perform best in each. By the end of this video, you'll have a clear strategy for trading different market conditions based on the US economy. We will then identify the environment we are currently in, then go to the charts to look for opportunities this week. Let's get started. The economy moves in cycles, and each phase has its own characteristics. These four environments determine whether inflation and growth are rising or falling, which influences central bank policy and market sentiment. Reflation is when growth is rising and inflation is rising. Goldilocks is when growth is strong and inflation is low. Stagflation is when growth is slowing and inflation is rising. Recession, growth is falling and inflation is falling. Now, let's break down each environment and the best assets to trade in each. Reflation occurs when the economy starts recovering from a slowdown. GDP growth picks up, inflation rises, and central banks may keep rates low to support expansion. Best currencies assets to trade. Strong performers. In this environment is the US dollar, stocks, S&P 500, NASDAQ, US oil and corporate bonds perform well as credit conditions improve. Weak performers, safe havens like JPY, CHF and gold struggle as risk appetite increases. In this environment, look for long opportunities in risk assets. Goldilocks, strong growth, low inflation. In a Goldilocks economy, growth is strong, but inflation remains under control. This is the best-case scenario for markets, as central banks have room to keep interest rates steady. Best currencies assets to trade: US dollar, stocks, S&P 500, NASDAQ, and long-term bonds. Weak performers, safe havens like JPY, CHF and gold struggle as risk appetite increases. Also in this environment, look for long opportunities in risk assets. Stagflation, rising inflation, slowing growth. Stagflation is one of the worst economic environments for risk assets. Inflation rises, but growth slows, leading to weak consumer demand and declining corporate earnings. Central banks face a tough choice: raise rates to fight inflation or cut rates to support growth. Pay more attention to this environment because it's where we currently right now. Best currencies and assets to trade: gold and silver are in this environment top performer as inflation rises. Safe haven currencies JPY and CHF. Weak performers, risk assets like S&P 500, NASDAQ and high-growth stocks fall as profits shrink. US dollar can experience mixed performance because it can be strong due to rate hikes, but weak due to economic slowdown. Shift to inflation hedges like gold and silver. Also safe haven currencies like JPY and CHF. Also US oil demand weakens as production slows. Recession, growth, inflation falling. In a recession, economic growth contracts, unemployment rises, and inflation falls. Central banks respond by cutting interest rates, which fuels demand for safe haven assets. Best currencies assets to trade are safe havens JPY, CHF, gold and silver. Weak performers is US dollar, stocks, S&P 500, NASDAQ, fall due to lower corporate earnings and US oil demand weakens as production slows. Now that you understand the four market environments, you can align your trades with the economic cycle. Always analyze economic data, inflation trends, and central bank policies to anticipate market shifts. As I said before that we currently at stagflation environment, that means we should be trading risk-off or safe haven assets. Now before we go to the charts, let's first check out the FXPI scores. FXPI means FX Power Index. It's a name I gave to the system I developed for scanning the markets and provides us with clear picture of which currencies and assets are stronger and weaker. Let us start by looking at these currencies. Remember when I said during stagflation the US dollar turned to perform very badly and safe haven currencies perform better? The Japanese yen took the #1 spot, followed by Australian dollar as a commodity currency, then the Swiss franc. I will also look to buy the pound since it's showing reflation environment. So pairing the bullish currencies against the bearish ones will give you trends. Don't pair currencies that are showing both bullish and both bearish. You will find yourself in a ranging market and lose a lot of money. Now let's look at other assets we can trade. Silver is giving a +6 score. That means it's a very good buy. Gold is showing a +2 score and it's still bullish. Last week gold was at +3. The reason why it went down a little bit this week is because the institutions closed almost 10k longs and added over 6k longs. That made the rate of change of the institutional positions to be slightly bearish and also the momentum shift to also slightly bearish. But the overall score is still bullish because we at stagflation risk. That's why under the economic data we got a +2.75, which means we should continue look for buys. Some of you may ask, since the FXPI score is showing a +3 on indices meaning we should buy, why did you say stagflation we shouldn't buy stocks? The answer is very simple. The reason why the FXPI score is showing bullish is because the institutions added lot of long positions and price is ranging but still a little bit bullish since we have not turned bearish yet. But economically we got a -2.75, which means we should be bearish but sentiments are telling us bullish. This to me is a mixed signal. We should stay away from stocks for now. Best shorts will be US oil. It's showing a -10 score, very bearish. Since this video has taken longer than I thought, I'll only analyze gold. Let's go to the charts. This is a weekly chart. My target will be 3000 level. Since I trade the Malaysian SNR, I have marked my support level at this open and close SNR. If price retrace to this level, I'll be looking for continuation buys. Now let us go to the daily chart. In this chart we have two more daily levels we can look for trade if price rejects them. The top level and the middle one. If we see at least a 4-hour support level being created in one of these daily levels, we will execute for buys. Now going down to the 4-hour chart. Right now what happened is price rejected this H4 SNR level and started moving higher. But since we have fresh weekly and daily levels, price might go down to test those levels before we see prices rally to the upside. If price does not go there, I will have to see price breaking this H4 level to show commitment to the upside. If you found this valuable, hit that like button and subscribe for more expert trading insights. Let me know in the comments which assets you're trading right now. Thanks for watching. Check out our next video.